Welcome back to TQFM Trading Strategies, your go-to channel for practical and effective trading techniques. In today's video, we'll explore a powerful trading strategy combining the Accumulation/Distribution Indicator, ADI, with the Relative Strength Index, RSI, to identify continued highs or lows in trend. By the end of this video, you'll have a comprehensive understanding of how to use these indicators to enhance your trading success. So make sure to watch the video to the end so as not to miss any important information. Let's dive in. Hey traders, it's great to have you here. Today, we'll discuss how to use the Accumulation/Distribution Indicator in conjunction with the RSI to spot strong trends and potential trend continuations. But first, let's quickly recap what we know about the ADI and RSI. The ADI, developed by Mark Chaikin, measures money flow into and out of a security based on price and volume. On the other hand, the RSI, short for Relative Strength Index, gauges the speed and change of price movements, identifying overbought and oversold conditions. Now, let's jump into our strategy. We'll focus on identifying continued highs or lows in a trend using these two indicators. Here's an example of a stock's price chart with the ADI and RSI plotted below it. Our objective is to find moments when the ADI and RSI both confirm the strength of the prevailing trend. In this example, we have an upward trend, and our goal is to spot potential continued highs in the price. As the stock price rises, we expect the ADI to follow suit, indicating buying pressure during price advances. Similarly, the RSI should stay in the overbought territory, above the 70 level, affirming the strength of the uptrend. Now, let's switch to a downward trend and look for potential continued lows in the price. As the stock price falls, the ADI should decline as well, showing selling pressure during price declines. Simultaneously, the RSI should stay in the oversold region, below the 30 level, signifying the strength of the downtrend. The real magic happens when the ADI and RSI align with the trend, confirming its strength. This convergence gives us confidence in the ongoing trend and potential opportunities for trades. Here are some key takeaways from this strategy. When both the ADI and RSI confirm an uptrend, rising ADI and RSI above 70, it's a signal for potential continued highs in the stock price, indicating a bullish opportunity. When both the ADI and RSI confirm a downtrend, falling ADI and RSI below 30, it suggests potential continued lows in the stock price, presenting a bearish opportunity. Always be mindful of divergences. If the ADI and RSI show conflicting signals, exercise caution, as it may indicate a weakening trend or a potential reversal. And there you have it, a simple yet powerful trading strategy using the Accumulation/Distribution Indicator in combination with the Relative Strength Index. Remember, successful trading requires discipline, risk management, and continuous learning. Traders can further enhance and customize the Accumulation/Distribution Indicator, ADI, and RSI trading strategy by incorporating additional elements and techniques. Here are some ways to make or improve the trading strategy. Multiple timeframe analysis. Consider analyzing the ADI and RSI signals on multiple timeframes. For instance, if you identify a bullish trend on the daily chart with ADI and RSI confirming it, check the signals on shorter timeframes, example, hourly or 15-minute charts, for better entry points and precise timing. Confirmation from other indicators. Combine the ADI and RSI signals with other technical indicators to strengthen your trading decisions. For example, using moving averages or Bollinger Bands can provide additional insights into the trend's direction and potential support/resistance levels. Volume confirmation. While the ADI already incorporates volume data, you can add an additional volume indicator, like the on-balance volume, OBV, to confirm the ADI signals. Volume can be a powerful tool to validate price movements and market sentiment. Divergence analysis. Pay close attention to divergence patterns between the ADI, RSI, and price. Bullish or bearish divergences can signal potential reversals, acting as a warning to manage risk and avoid false breakouts. Support and resistance. Combine the ADI and RSI analysis with key support and resistance levels. When ADI and RSI signals align with critical price levels, it strengthens the trading signal. Combining with fundamental analysis. While this strategy focuses on technical analysis, consider integrating fundamental analysis into your decision-making process. Understand the broader market conditions, company news, and economic factors to complement your technical insights. Backtesting and optimization. Test the strategy on historical data to evaluate its performance over time. Adjust parameters such as RSI period, ADI settings, or entry/exit criteria to find the most suitable combination for your trading style. Risk management. Implement proper risk management techniques, such as setting stop-loss orders and position sizing based on your risk tolerance and account size. A well-defined risk management plan is crucial to protect your capital. Trend confirmation from higher time frames. Confirm the direction of the trend on higher time frames. If you are trading on a daily chart, look at the weekly or monthly chart to ensure that your trades are aligned with the longer-term trend. Real-time market sentiment analysis. Stay updated on current market news and events to assess their potential impact on your trades. Sudden changes in market sentiment can influence the ADI and RSI signals, so being informed is essential. Remember that no trading strategy is foolproof, and the market can be unpredictable. Always be prepared to adapt and adjust your approach based on changing market conditions. Regularly review and fine-tune your strategy to stay ahead in the dynamic world of trading. Additionally, consider keeping a trading journal to track your trades and learn from both successful and unsuccessful trades. Continuous learning and improvement are the keys to becoming a successful trader. If you enjoyed this video, don't forget to give it a thumbs up and subscribe to TQFM Trading Strategies for more valuable content. As always, feel free to leave your questions and comments below, and I'll be happy to help. Happy trading, and I'll see you in the next video.